So good morning and welcome to the Arizona Commerce Authority Small Business Boot Camp. My name is Faith Ritchie and I'm the Small Business Programs Manager here at the ACA, filling in for usual host Robert Theobald. Now, for many of you who have been joining us, we always like to start our sessions with a thank you to all of our amazing community partners who, without their expertise, time, and assistance, we would not be able to deliver this programming free of charge to all of our attendees. Now, the Small Business Boot Camp was formally designed to assist small businesses of less than 20 employees return from the COVID crisis stronger than ever, but continues to provide content to assist small businesses prepare for success, plan for the future, and grow a thriving business. It continues to be a statewide initiative supported by our community partners and hosts a content library and workshop series of extended topics. Now, the content library is the collection of more than our 200 recorded webinar sessions covering many different topics, strategies, and tools to assist entrepreneurs and businesses succeed. So if you're interested in learning about a topic or revisiting a favorite session, we welcome you to visit that content library to review those recordings and resources on the website. In addition to our programming efforts, the ACA has other services and resources available to assist the small business community throughout the state. So whether you are looking to start, grow, or scale, there may be additional resources for you. For additional information regarding these programs, our Small Business Services, Arizona at Work, and the Arizona MEP, the Arizona Manufacturing Extension Partnership, you know we love acronyms, I encourage you to visit the Arizona Commerce Authority's webpage for more information and guidelines about these programs. Now, as we talk about looking to start, operate, and grow in Arizona, the ACA also hosts the Small Business Checklist. Now, the Small Business Checklist is an online, interactive, and intuitive tool to help answer all of those commonly requested licensing and permitting questions for local, state, and federal levels. So if you are looking to start, grow, and expand here in Arizona, we always recommend that you visit our Small Business Checklist to make sure you are getting all of those T's crossed and I's dotted. Of course, if you have questions working through the checklist, there is Sally here at the bottom corner who can help navigate to those specific inquiries, or our contact information is also listed on the checklist for maybe one of those more specific questions in getting started. Additionally, for programming with our small business service team, our Small Business Digital Academy will be hosting a fall cohort. This program is a 6-week cohort style program to assist small businesses grow their online presence. If you are interested in this program, it is at no cost. I recommend that you visit our website, and I will be sharing that link in the chat shortly. Applications are open throughout this week, so please be on the lookout for communications. Those who have applied to the program will begin getting communications this week to get ready for our kickoff cohort date. So again, that website and application link are available for you in the chat, and we'd love for you to see if this is a great opportunity for you and your business. Now, looking at our upcoming sessions, we are excited for these topics, and we are excited throughout October, so be on the lookout for those announcements. But to wrap up our September sessions, we will end with navigating a hot job market, and then kicking off our October sessions, we will welcome back Mike Jones to talk about unlocking your authentic brand story. So these are return presenters, but we are excited to have them expound on previous presentations and excited to welcome them back. And like I said, we have a great lineup through the rest of this year, as Stephanie and I were talking before we got started with today's presentation. We know this year, the rest of it is going to zoom by. So please, if you have the availability on your Tuesday mornings, we're going to fill this spot with some efficient and amazing information for your business to close out 2022. Now, for the reason we are all here today, I am happy to introduce the founder, author, and podcast host, Stephanie Sims. Stephanie has also been with us here on the boot camp and is founder of Financeability. We are so excited for her to share her talents and expertise with us, especially as she talks for today's topic, building a profitable path, eliminating obstacles, keeping your business from generating revenue. So welcome, Stephanie. I will go ahead and stop sharing my screen, and the time is now yours.
Awesome. Thank you, Faith. So first, let's get the slides going. That way you guys can follow along. There we go. So thank you so much for the opportunity to be here. It's always a pleasure to work with you guys and to talk to the small businesses that I know get so much benefit from working with the ACA. Today, we're going to be talking about how to refine your path to profitability, or for those of you who may not be there yet, how to define or find your path to profitability. So before we get started, I'm going to encourage you to make a little bit of a shift in your mindset. And I'm going to encourage you to start to think like an investor. You have chosen to be here today. We're going to spend about an hour together talking about this path to profitability. And so I want you to think about what brought you here. What's your biggest worry when it comes to profit? What is one question you could ask, one bit of information that you could get that would make the time that we're about to spend together a big win for you? Okay, go ahead and put that in the chat. I'd love to hear about it because I want to make sure that you get value from the time that we're spending together today. I also want to make sure that you know where the chat is, although I saw a lot of people using it on the way in, so I'm pretty sure that you understand what we're using to communicate questions. I'll let you know that the presentation today is structured in 3 parts, and what I'll be doing is, instead of stopping to take your questions during each section, I'll try to reserve those questions to the end of the section, and then we'll tackle them all at once. Obviously, if there's a big problem like you can't see my screen or you can't hear me, don't hesitate to put that in the chat immediately, and I'll keep an eye on it. But otherwise, let's try to get through the material, and then we'll address your questions as they come up. Don't hesitate, though, to put those questions in there, because that is how you're going to get value from today's session. And make sure that you're asking questions that are going to help you move your business forward. Okay? So really quickly, I just want to tell you a little bit about me for those who don't know me. My name is Stephanie Sims. I help entrepreneurs build economic stories that make dollars and cents. I just want to share my experience so you realize that what I'm providing to you today is not sort of theoretical learning, although I do have degrees and all that kind of stuff. It's really experience that comes from being both an investment banker and part of early stage startup companies that went from zero to being sold by a publicly traded company, as well as mentoring and working with tons of startups who have faced some of the same challenges that you are throughout the life cycle, all the way through exits for those folks as well. I would also encourage you guys to connect with me on LinkedIn if you'd like to continue our conversation after this event. I'm always happy to try to connect you to resources or to answer questions if you have them. I'm Stephanie J. Sims on LinkedIn. And if you guys want to share in the chat your LinkedIn profile, sometimes that can be a good way to connect with each other as well as connecting with me. All right, so let's get going. What are we going to talk about today? So as I mentioned, we're going to really help you understand if you're on a path to profitability, or if you've been on it and gotten off, how you can get back on it. Okay, and we're going to break that down into 3 distinct areas of discussion. The first question is, we're just going to clarify what it means to make a profit. I know most of us are not accountants. And so a lot of times when people talk about profitability and cash flow, they refer you to their financial statements. And for most entrepreneurs, to be honest, that's not very helpful because that's not how you run your business. So I'm going to talk a little bit about that and share with you a couple of tools that can make that easier for you to understand and really help you translate any conclusions you come to through your analysis of your profitability, translate those into action, because ultimately it's not about what you know, it's about how you use what you know to move your business forward. Once we talk about that, I just want us to spend a little bit of time recognizing that profitability is not the same thing as cash flow. And as you're trying to build your business, or as you're trying maybe to get your business back on track after having gotten off track, you need to keep an eye on both of those elements so that you can ensure not only that you're on the path to profitability, but that you have enough cash flow to continue operating your business while you're getting there. And then in the last section, we'll really talk about how to take these different elements that we've discussed in the first two sections and apply them to your business so you can figure out what an immediate action step might look like so that you can start to make a difference in your business. You'll notice that I have a serious bent, a serious bias towards action. And so what I want you guys to really be able to do is to take what we're talking about today and apply it in a way that is meaningful for your business so that you can continue to move forward and build the business that you want. Okay, so let's dive right in. The first question or topic that we're going to talk about is, what does it mean to make a profit? Okay. And remember, I said that I was going to challenge the way that you think about things now, and I was going to encourage you to develop maybe more of an investor mindset. And so profit is the goal. That's the thing you're trying to generate from your business, right? It means that when you sell something, whether it's a t-shirt or a software subscription or a service, you want to make sure that you sell it for more than it costs you to produce it. And that way you have profit left over. Okay. What I want you to recognize, though, is that everything you're doing in your business is an investment. And not just the things you're paying for, not just your employees and the, advertising on social media or other things you might be paying for. Your time, your energy, your reputation, the way that you present yourself in public, all of those things are assets that you have in your business. And you want to make sure that you are using all of those assets in the best way possible to get you to the return you expect, right? Which normally would be a profitable business. So I would challenge you to start thinking about yourself, not just as a business owner, but really as an investor in your own business, and to try to think to yourself as you're making decisions in your business, what am I expecting this particular thing to do for my business? And how might I even quantify that to know if it was a good investment or not? Okay, that mindset is going to serve you not just when it comes to profitability, but also when it comes to making decisions throughout your journey in building your business. Whoops, it would help if my slides would move forward. There we go. So one of the ways that you can really concretely start to think like an investor is by doing a quick analysis on each investment that you're making in your business. And so I just want to walk you through a little example of what this might look like. So let's say that you want to go to a trade show because what you want to do is you want to get a list of prospects for your business. So you're going to go to this trade show and maybe you're going to walk around and meet people, shake their hands, and you're going to ask them to give you their business cards. Or maybe you're going to sponsor a giveaway and you're going to have people put their business cards in a fishbowl. Or maybe you're going to give things away, right? T-shirts and swag. And again, ask people to sign up for your mailing list or to put their business cards, give you their information, their contact information in some way. So that's what you're going to do, right? The first thing that could help this become more concrete in terms of analyzing this like an investor would be to think about what your success metric would be. So great, I want to go to this trade show and get prospects. Well, how many? What would make this trade show a success in terms of prospects? And so here, for example, let's say that your target is to get 500 names of potential clients at this trade show. Great, so now we have a very specific and very easy to understand measurement of success. Then we can start to think about, well, what is it going to take in terms of resources for me to go to this trade show? And we want to include here not just money, so what it cost me for the booth and what I have to pay for travel and things like that, but we also want to think about our time, right? I'm going to have to go as the owner maybe of my business, I'm going to have to go for 2 days. Well, that time has value because it's time I can't be doing other things in my business. And let's say that you analyze all of that and you realize, okay, this trade show is going to cost me $5,000 all in. Well, what you can do is you can start to quantify the cost of those prospects by dividing the amount that it costs you to go to the show by the number of successes you expect, right? So in this case, we would be looking at an investment in the trade show that would cost $10 per prospect. And the reason this is powerful and can be really helpful in your business is not just because it helps you to know, oh, wow, okay, those prospects cost me $10. And now I can compare that to the price of my product or service, right? So, wow, is that a lot or is that a little compared to the value of the thing that I sell? But you can also start to compare it to other methods of getting prospects. Let's say that you also were considering buying an email list, right? Well, maybe the email list would give you many more prospects at a lower price. And so your cost per prospect for buying an email list might be $1 as opposed to $10. Well, once you can compare those two things to each other, it gets easier to make a decision about which one you should start with. You can start to prioritize the things that you're going to do in your business by trying the least expensive options first, because if they work, then you've saved all of the money that you would have invested in a more expensive way of acquiring prospects. Okay. And moving your thinking into this more investor approach can really help you make better decisions in your business so that you're preserving the precious resources you have, right? Why would you want to pay more for a prospect, assuming that the prospect is equally qualified? Why would you want to pay more for them if you didn't have to? Right? It would be great if you could use that money for other things in your business. So I really want to encourage you to start to view everything we're going to talk about today in this lens of how do I become a better investor in my business and how do I make better decisions about where to focus time, energy, money, etc. Okay. So we mentioned that profit and cash flow and all these things that have to do with accounting are often described in terms that don't really make sense to entrepreneurs like you and I, right? We didn't grow up necessarily, well, I grew up, my dad's a CPA. I grew up listening to accounting, but you guys probably did not grow up listening to accounting terms. And so it doesn't really come naturally to you. And so what I want to offer you is a concept, a framework, if you will, that might help your financials make more sense so that you can focus on making better decisions and taking action, right? Because the last thing anyone wants you to do is get a bunch of financial data, but then not be able to understand it or be able to take action on it. All right. So instead of thinking about your financial statements in traditional financial terms, what you can think about your financial statements as is a link to your activities. So right now on your profit and loss statement, it probably says something like sales and marketing expense. Well, what that really is that's all of the activities you do to attract buyers to your business. Okay. So you can start to make that shift in your head. Okay, what are the things I do to attract buyers? Likewise, when you see on your profit and loss statement something called cost of goods sold or cost of sales, really what that is that's how you deliver your solution, your product, your service, or your software if you happen to be in a software business, right? So don't worry about cost of goods sold. Think about delivering your solution. When you see things like operations or customer service on your profit and loss statement, what that really is about delighting clients, right? So how do I keep these folks I've worked hard to acquire as customers? How do I keep them happy? So either they keep buying or they make referrals. They tell other friends or they do testimonials for me or anything that they could do to continue to assist my business, right? And then the last piece that sometimes hangs people up is this notion of product development or R&D. And what I want you to think about there is what are the new offers that I need to create in my business that are going to continue to help me grow, right? So kind of a virtuous upward spiral. So let's see, right now you have one product and you're doing really well with that, and now you want to grow. You could do one of two things. You could take that same product and tweak the way that you talk about it so that you offer it to a new target customer. That would be a new offer. Or you could say, wow, my customers that I already have really have this other problem, and so I'm going to develop a new solution for this other problem they have, and that's going to be my new offer. Either of those is fine, but both of those involve some research and some trial and error and some experimentation before you know that you have an offer that really resonates with potential buyers. And so that's really what the product development element of your profit and loss statement is talking about. Now, there's one other one that's not on this particular chart because I haven't found a way to put it on here, honestly, but it's called support, right? So on your profit and loss statement, you probably have seen something called general and administrative, or G&A. What you want to think about that as is, what are the things I have to do to support my business, to keep things going, right? That might be my physical location. That might be anything that has to do with legal or accounting or tax compliance. Any of those things might fall into that support category as well. But what I want you to think about, instead of getting hung up on these terminologies, I really want you to think about how you tie each of these segments of your profit and loss statement to action, because that's how you're going to be able to move forward and make better decisions for the business. So one example I want to give you is looking at a profit and loss statement using these new terms, right? So instead of talking about, cost of goods sold and all these other things, you can recast your profit and loss statement in these new terms, right? So let's say that we're looking at 1 month's profit, and we're doing revenues of $225,000. It costs us, because we're an actual physical product company, it costs us $160,000 to produce those goods, which means that we have a gross margin, which is just how much money we have left to run the business after we've provided our product or service, of $65. Okay. Then I can start to think about, well, how much does it cost me to attract my buyers? How much does it cost me to delight the customers I already have? How much does it cost me to build new offers? And how much does it cost me to support my business, right? And that's what you can see leads me to this conclusion that right now it's costing me more to do all of those things than I'm making off of the products or service that I sell, all right? However, now let's go through this really quick. I don't know why it looks, whoops, there we go. However, what we want to think about is, what are the changes I could make in my business that would tighten up some of these costs and at the same time help me grow my revenues? Okay. And so let's say that I'm looking forward a year and a half from now, right? So the end of next year. What are the things that I could put in place that would help me get 3 times as many customers, but also reduce the cost per unit of my product, right? And maybe that's just because I'm going to get some volume discounts, right? It could be that simple. Once I get to a certain level of volume, then I know that my price per unit goes down. So I know that I can count on a reduction in the cost to deliver those goods when I get to this higher level of customer, right? Maybe I also know that I'm going to be able to reduce how much it costs me to attract those customers. Maybe it's because of volume, or maybe it's because I'll be using a different methodology, right? I'll have a better brand recognition, or I'll sign a partnership with someone that's going to allow me to attract those customers at a lower cost. And maybe I'm going to do a better job delighting the customers I have, and it won't cost me so much, right? And what I can see is, by making those, focusing time and energy on those 3 particular areas, those 3 potential changes, I can change my business from losing money to profitability. And so what we're going to talk about in a little bit is a methodology that's going to allow you to build this out for yourselves. But what I want you to understand is that knowing these numbers is not something as simple as, okay, great, there's the numbers. It's really, how can you use those numbers to your advantage so that you can make the right decision about where to focus time and energy to get to where you want to go, which is profitability. Okay. So the one other thing I want to encourage you to think about here is there's two pieces to the puzzle. A lot of times when we think something needs to change, we think that means we need to do more, right? It's about, well, what other things do I need to add to my to-do list? I would encourage you to use the numbers in your business to understand what you need to stop doing. A lot of times what you can learn from the numbers are the things that aren't working. And sometimes the very best thing you can do for your business is to say, this particular thing is too expensive. I'm not going to do it anymore. I'm going to take the money I was investing in that and I'm going to invest it in something else, right? And a lot of times that simple shift, that simple change away from what's expensive and not working can get you much closer to profitability. And so part of the goal here is not just to identify, oh, great, what are the other 15 things I should be doing? It's also to identify what are the 5 to 10 to who knows how many things that I should stop doing because they're not providing a good return. Okay. So I see we've got a couple of questions. I think there's some Q&A. Okay, perfect. Okay, so thank you, Christine. Christine shared that it looks like she has some seasonality in her business. And so I think that that's a great idea to think about how you could manage the seasonality. Christine, I'm not sure if you have a specific question around that. If you do, feel free to go ahead and share it. I see that you said learning how to increase profits each month over last year. We're going to talk about a way to analyze your numbers in just a second that might help you understand, okay, how to do that. I think that the key to knowing how to increase profits is understanding how you created them in the first place. And once you understand how you created them in the first place and where to make good investments in your business, then you can start to know where you should focus more time, energy, and money so that you can continue to grow those profits. Okay. So hopefully that helps. And again, if it's not clear after we go through the next sections, let's talk more about it. Feel free to ask another question that would help clarify it for you. I see that Zarina asked a question, trying to figure out how to transition my business from Maryland to Arizona and get into a place of growth to generate recurring. Okay, perfect. So Zarina, it sounds like you're a student and maybe your business right now is a side gig. I think that one of the best things you could do for yourself, excuse me, is to try to understand your unit economics, which is what we're going to talk about in a minute, for the business while it's still small, right? Try to understand of your sales price for whatever it is that you sell, your product or service, how much of that is attributable to delivery, how much is attributable to attraction, how much is attributable to support, to building, and to delight, right? And so that would be my suggestion is go ahead and even if you're not loving your accounting system, find a way for you to think in those terms of the actions that you're doing and how much you're investing in each of them so you can identify what it is that needs to either stop happening or that needs to be changed. Okay, perfect. So I think we've got that. Oh, and thank you, Zarina. I didn't realize that you were full-time in your business. So hopefully, I don't think that would change my answer necessarily. Maybe it would just mean that it's a little bit more important to try to do it before you go back to school full-time so that you're not trying to build a system while you're also taking on this additional responsibility. But happy to talk a little more about that if that would make sense. Perfect. Okay. So, perfect. Faith did a great job asking everybody to put questions in Q&A. So let's keep moving. Okay. Now, remember I said we've been really focused on profitability, right? We were talking a lot about profitability, but what I want to put this caveat on as we're thinking about this is that we don't get tunnel vision and we lose sight of the fact that cash and profit are not the same thing. And so I'm just going to walk you through a couple of elements to make sure that we're on the same page about this, not to scare you. For those of you who don't like numbers, you're like, oh my God, it's an entire slide of numbers. I'm going to walk you through it. Don't worry. But it's important for you to understand this distinction because it can have a really big impact on the ability of your business to survive. Just so that we're clear, when a business goes bankrupt, it doesn't mean that the business wasn't profitable. That may have been the case, but that's not what a business going bankrupt means. A business going bankrupt means that the business did not have enough cash to pay its bills. And so yes, that could be related to profitability, but it could also be related to very rapid growth in a business that has some working capital issues, meaning that it needs more cash early. And the way that the cash comes into and goes out of the business makes it difficult for the business owner to be able to pay their bills in a timely manner, even if they're profitable. Okay, so I just want us to be clear. Even if you're profitable, you still need to pay attention to cash flow. And particularly if you're not profitable, you're going to want to pay attention to cash flow as you try to get on that path to profitability. Okay, so what is the difference between profitability, which this is the same example we saw before, right? Where we're losing money right now. And I just want you to look at it. This is what it would show on your profit and loss statement. So if you're looking at a month, this is what you would see on your profit and loss or income statement. But what I want you to understand is this is how the cash would flow in your business. Okay, so let's just walk through what this means. What we've got here on the right hand side are the day that you sell something, right? So that's the day when money would actually come into your business, assuming that people pay you on time, right? At the time that you sell. This is when the money would come into your business. But because you're a product business, you have some expenses that are going to happen 30 days before you make your sale. And in some cases, maybe even 60 days before you make your sale. And so what that means is for this sale that's going to happen, let's say 2 months from now, what are we, September? Let's say this November, for a sale that's going to happen in November, today, right now, I have to spend money to buy the raw materials or the product itself. I also have to spend money to try to attract that customer. I need to spend money on this sort of ongoing new offer research and development that I'm doing. And I have to spend money to support my business, right? I still have to pay all those bills. And so today, right now, if I had no customers, I would have to put out $222,000 for all of the things that need to happen to make this sale that's going to happen 2 months from now possible. Okay. Likewise, in the next month, even as I'm producing, manufacturing my product, I'm still paying to attract the customer. I might have to pay, let's say that I have a coupon, right, to encourage these people to buy. I might have to pay for that coupon or that discount. And I'm still building and supporting my business, right? So again, even before I've sold anything, I have another set of cash expenses that has to go out, that has to be paid. And finally, at the point in time when I make my sale, I still have some money I have to spend to keep that customer happy and again, to support my business. And so even when I make my sale, I don't necessarily get to keep all of the cash from that sale. Now, I show you this example, not to scare you, but just to help you understand that it's important to get to profitability in your business. It's important to understand that every unit you sell is profitable. However, it's also critical for you to understand when the cash comes in, and more importantly, when the cash has to go out of your business, right? And the reason that that's important is particularly if you're a product business and you have kind of a long sales cycle, meaning it takes you a while to produce your product and then a while to get it to market, you're out this entire cash for as long as it takes you to sell. And so if you've ever heard people talk about working capital needs or working capital lines of credit, this is why those are so essential for companies that manufacture real goods. Because more often than not, you have to make whatever it is you sell well before you're able to put it on the market. And so you need capital, a loan or some sort of facility that would allow you to pay these bills well before you've made any sales. Okay, so I want you to keep in mind, although it's not the focus of today's conversation, I want you to keep in mind that profitability is not the only element that you need to keep your eyes on. You need to be sure that you're also understanding your cash flows, because you could be really profitable, but that doesn't mean that you can necessarily meet all your obligations if your cash flows are spread out over time, right? Especially, so this is especially true for people who have long sales cycles. This is especially true for people who have relatively high expense on the cost of producing their good or service. And this is also the case for people who have maybe very competitive, that they're competing in a market where it costs a lot of money to attract their customer. And again, the sales cycle is a little bit longer, so they might have to invest for 2 months before they can get a customer. All right. So again, just want to be sure you guys understand that you need to keep, profit is important, but you also need to keep your eyes on the cash flow. Okay. Oh, interesting. So I want you to think about this cash flow issue in terms of potential problems you can identify, because some of these are dependent on how you run your business, but some of these are also choices or decisions that you're making in your business. So working capital, which is actually number 2, I should probably move that to number 1 since I just gave the example for it. But working capital, which is number 2, is what we just talked about. This notion that I have to make investments in my business that facilitate sales, but the sales don't happen for a period of time after that. That can be one big drain on cash. But there are a few others that you can choose, notably if you make investments in equipment or property or other things that you might need to run your business, right? So let's say that you want to automate, you're building a widget and you want to automate the production of your widget. Well, ultimately, you can decide when you make that investment in that equipment that's going to allow you to automate the process. And so if that's the direction you want to go, what you ought to think about is, how do I get to profitability first? So then I know that once I automate, my costs may go down and help me increase my profitability. And then how do I manage my cash flow when I need to buy the equipment first? And then only maybe a few months later, can I see that my costs have gone down and even improved the profitability of my business? Okay, so I, again, just don't want you to get totally tunnel vision on the concept of profitability, because sometimes you're going to have to make a payment in cash that's going to happen well before the benefit happens to get you to profitability. And you just want to be aware of what that investment looks like. Okay, because you get to pick, right? You can decide when you want to automate and invest in that equipment. Likewise, a lot of times we make investments in technology, whether it's buying a whole new set of computers, whether it's investing in a massive security system to cover our warehouse, whether it's investing in custom development of a website or an app for our clients. Those are the kind of investments that you also have control over and that you can choose the timing of. And so again, I would suggest that as you're considering those investments, you try to understand what the impact on cash would be, as well as the impact on profitability, so that you can make those decisions and make those investments at a time when your business can really sustain itself during that period where cash flow will be tighter because you've made these big investments. The other thing that I would encourage you to think about is what a lot of people call operating losses. In an early stage of your business, your support costs may be a big number relative to everything else, because if you have a full-time assistant, or if you have a full-time customer service person, or if you have a lot of, say, legal expenses to get your business up and running, when you have few customers, those expenses are big. However, it's really helpful for you to try to understand maybe how many customers you need to get to make those support costs more reasonable and a much smaller percentage of your overall profitability picture. That can also give you a target to shoot for, just like we were talking about earlier, thinking like an investor. If you know that by the time you get to 100 clients, then your cost of running your business is a relatively minor portion of your overall expenses, you can maybe see your path to getting to profitability as a little bit easier, right? Because you have a clear target. I need to get to 100 customers. And so thinking of it in that way and really understanding what's the point at which these fixed expenses would be a reasonable percentage of my expense can help you identify also the best path forward, okay? The other option, of course, is to think about those fixed expenses and to determine, do you really need that right now, right? Is it essential that you have, a brand new website? Is it essential that you have a full-time assistant? Maybe those things could also be phased in or brought in at a point in time when your profitability is either closer or actually happening, so that you can create your own set of reserves in your business, and you take that profit and you hold it as like a savings account. And then you're like, oh, great. So now I have the $15,000 it takes to build myself a new website, right? Then you're not worried about the cash flow because you know that the cash is already there. So again, all of this is designed to get you thinking about your business in a little bit of a different way so that you can make better decisions as you're getting yourself on this path to profitability. So let's see if we've got any questions. Okay. Okay, Donna. Okay, so Donna, I think maybe you were answering the question about what your biggest profit worry is, because Donna says learning how to build the structure and foundation to grow, scale, and attract investors, and then shift to a franchise micro business. So I might need a little bit more information here, Donna, about exactly what you want to do, but it sounds, I love the idea that you want to build a structure and a foundation. And I think especially if you're shifting to more of a franchise model, that a very clear understanding of the metrics that you need to hit to demonstrate that the business can be profitable is going to be essential, especially if you're trying to sell other people on the idea that they want to become a franchisee, right? And so I think what you could use is the experience that you're going through maybe now, or the experience you've been through as you've built your business, to identify what are the milestones that indicated to you that it was possible to get profitable. So maybe it's after I had my first 10 clients, I knew that I was in the right target market. And then after I had my first 50 clients, I knew that my pricing had been valuable because I was consistently able to sell, and the sales questions were not, I was closing maybe 50% of my sales. And so I think for you, as you try to move into this new franchise, which is what I'm understanding that you want to do, as you try to move into this new iteration of your business, I think almost creating a process around how to evaluate the growth of the business would be very valuable for people who might want to buy the franchise, and could be a sales tool for those people, right? It's not just, hey, I'm going to sell you the concept and maybe all of the things you need to make this business work. It's, I'm going to help you build a plan to know that you're on the right track for getting your business to profitability. Hopefully that helped. Okay, so Annette says, in an outpatient therapy practice, how to profit when your main billing code. Okay, so Annette is speaking about something where she has some caps on her revenue. And so what I would suggest, if you have either a market cap, right? So a market cap means that people just aren't willing to pay more, or if you have more of a regulatory cap, which is what it sounds like Annette's issue is. If you have a regulatory cap, I would try to understand other problems that particular person, that client might have, that you could solve for them, that would allow you to provide additional products or services. So instead of trying to charge more when you can't charge more, right? I would say I would expand maybe horizontally and say, what are other problems I could solve for them that might be a different type of revenue that would allow me to serve the client, obviously to add value to them in a different way and generate a different revenue stream for my business. Something that comes to mind, and I have no idea if it would work, Annette, but is there some sort of subscription model around either individual or group coaching? Again, I'm not exactly sure if that would be a fit for you, but perhaps there are ways where you could move in sort of a horizontal direction that would allow you to provide additional services that would then keep you from running up against the cap that you sound like you're hitting with that specific client, right? So hopefully that helped. I would encourage everybody always to be thinking not just about how do I continue to serve the clients I have now in the current way I serve them, but thinking about how do I build a new offer, right? Whether that new offer is how do I serve this client in a different problem, or how do I take this offer I have and use it to serve a different set of clients, okay? And that's really what that whole build product/product development area that we talked about is designed to do, okay? So hopefully this has helped you guys, and let's dive in to the next sort of actionable way that we can take what we've talked about and use it to move your business forward. Okay. So economics, unit economics, and I've alluded to it a little bit, but what I want you guys to understand is that unit economics is a very, very powerful tool. I mentioned before that you may not love QuickBooks and that you probably are not in there looking at your profit and loss statement every day, which is totally okay. That's fine. But unit economics is a tool that can really help you not only understand your numbers better, but again, give you some indicators about where the best place to make a change is in your business. Okay, so I'm going to encourage you to try, and it's not complicated, I'll show you how, to try to focus on your unit economics as opposed to necessarily focusing just on your overall profit and loss statement. Okay. So the first thing that you have to do when you start to think about unit economics is determine what your unit is. So your unit is always associated with revenue, but depending on what you sell, your unit might be different things, right? So let's say that you're an e-commerce site. Well, your unit in your e-commerce analysis might be your average cart value or your average online order. If you're a services business and you sell development projects or you sell consulting services, your unit might be your project. Now, you can see that these two numbers look very different, but the basic structure is the same. And ultimately, what you're trying to understand when you're looking at your unit economics is how much profit does each unit that I sell generate, right? So in our e-commerce example, that's every single order, right? How much money do I make on every single online order? And on your services side, it's how much money do I make on every single project that I do, okay? The important thing is that the unit needs to be meaningful to you, and it needs to be the way that you think about your sales process, because you're going to want to attach your attraction costs and your delight costs to this analysis, okay? As we mentioned before, you may not be there now, right? You may not be profitable today. And again, this is the same example we've been looking at before, okay? You may not be profitable today, but knowing where you are today and understanding what needs to change to get you to profitability is the best way to develop a plan for getting there, okay? So the easiest thing to do, if I was looking, let's just say that I was looking at the left side of the screen and I was only looking at this set of unit economics, right? Okay, so it's a e-commerce product company, and this is their average cart value, and this is what their cost of the products themselves are, including shipping. And then these are all their costs to attract, delight, build, and support, right? Well, obviously the biggest expense I've got here is my delivery costs, right? What it costs me to create or manufacture the thing I'm selling. And so my first stop, if I was trying to move this company to profitability, would be, how do we reduce your cost of things that you sell, right? Maybe it's around shipping, maybe it's around purchasing in units, maybe it's around changing your product mix, but whatever it is, how do we reduce the cost of those goods that we are selling? And you'll see that one of the ways, through whatever mechanism, I've been successful in reducing that, which has given me a lot more gross margin to work with, okay? The next question then is, and again, you just go by like, what's the most expensive? Okay, that's the most expensive one. Okay, the next one that's most expensive is attracting clients. Okay, great. Well, so how do I reduce the cost of attracting customers? What some people call customer attraction costs, right? CAC. This could be done through experiments. This could be done through either expanding channels or maybe reducing channels. It could be done through partnerships. But again, if you know that this is where you need to focus time and energy, once you've solved this problem, then you could spend a couple of months really focused on how to reduce the cost of customer attraction, right? And likewise, I would go through the different elements, looking at the most expensive first and working my way down to the least expensive, and try to understand what I needed to do to get those costs down so that I could hit profitability, right? So your unit economics are really designed to get you to focus on the place where you can have the biggest impact on profitability at the unit level, right? So if this wasn't an e-commerce company, if this was a project company, and it turned out that my biggest expense was around attraction, well, then I would want to focus on attraction first. How do I reduce the cost of acquiring customers? And that's where I would put time and energy to start with in this analysis, okay? One other thing that I want you to consider is that it's okay if your unit evolves over time. And this is often what happens as you have an earlier stage business and you might start to understand your business and think about it in a different way, okay? So for example, let's say that I'm selling a software subscription. And when I start to think about my business in the early days, I'm thinking about subscriptions. So I'm really thinking about it as a monthly sort of analysis. But then as I start to see that most customers are hanging around over time, I change and I stop thinking about my unit as a subscription and I start to think about my unit as a customer. And then you can see that what I understand and the way I look at my business is quite different because I've been able to realize that acquiring a customer is not about just getting 1 month subscription. It's about getting a 12-month lifetime value off that customer. And that's what allows me to see the real place I should be investing in my business more by looking at things in that different way, in that different unit, okay? So don't be afraid to let this evolve over time, okay? So what I would encourage you to do is to calculate your unit economics. Oh my goodness, wow, that was not good. Sorry, give me a second. Hold on, there we go. What I would encourage you to do is to identify your unit and then calculate your average unit today, right? All of this is based on averages. It's just taking what's on your profit and loss statement, dividing it by the number of units you sell today. But then once you know what that looks like today, you can start to compare future deals to your average. And you can start to say, oh, wow, okay, so when I attract customers that look like this, those customers are below my average profitability. Maybe it costs me more to attract them, or maybe their revenue off that customer is not as high. And you can start not only to improve your overall unit economics, but you can start to improve the health of your business by only picking customers or new products or new services that are going to improve your unit economics, as opposed to focusing on something that might reduce the actual efficiency of the investments that you're making in your business, okay? What I call this is like, stop digging a bigger hole. If you start marketing and you see that the results of the marketing are customers who are less profitable, then stop marketing to those people because they're not a good fit for you, right? You already know that they're not going to be as profitable as the ones you already have. So thinking about unit economics is not just a one and done sort of analysis. It's really something that you can continue to use in your business so that you can constantly evaluate, are the new customers, new products, new services, whatever it is I'm bringing on, are they actually contributing to making my business more profitable? And if they're not, either I don't want to do that anymore, or I'm only going to do it in limited cases, because I see that as an opportunity perhaps to get into a market where eventually I will get more of the type of customers that I want, or more of the type of sales that make sense for me. Okay, so let's see if anybody has questions. I don't think anyone has questions. And so unless, hold on one second. Okay, so Susan, I'm not sure I understand your question. Maybe if you would just clarify what your question is, that would be really helpful. I'm going to take the other question we have. So we have a startup service business to reduce the cost of units we sell. Increase gross margin, the highest unit cost is time. Okay, so this is a great question because it's a service business, right? So this is somebody, thank you for sharing your question. They have a service business, and the biggest cost of their service is obviously the time, right? And so the question is, how can they get to profitability? How can they improve their unit economics if this sort of question of time is what's their biggest cost? So I think there's two places I would consider this. I would consider what is the essential part of the service that has to be done by the highest value resource. So for example, are there elements of the service that are getting the person set up and cleaning up the room and things like that, that wouldn't necessarily have to be done by the high value resource that's doing the actual service, and treat it almost like this is how doctor's offices sometimes work, right? The doctor doesn't come in and take your vitals. The doctor doesn't come in and ask you how you're doing. Well, they ask you how you're doing, but only after someone has asked what you're coming in for and taken all that initial information. The reason is that the doctor's value per hour in terms of a resource is higher than the value of, or the cost of the nurses who might be assisting them. And so I would see if you could break the service itself down into smaller components and have the lower value components from the client's perspective done by someone who might have a lower cost resource. And I think the other question is there any way that you could consider raising prices for specific elements of the service that, I would say if there's any elasticity in the pricing, meaning if you promote it in a different way, would people be willing to pay more for it so that you had more margin? Hopefully that helped you on the question about that service business. And then I see Christine. Christine had a question. If you have lots of units, say 25 to 50 different questions, do you just take an average? So I'm guessing this means that you sell 25 to 50 different types of products. I would look at your customer behavior, and I would try to think about maybe what an average purchase looks like instead of necessarily looking at all 25 to 50 average together. And then I would also look at the ones where you have very few purchases and maybe use the unit economic analysis as a way to reduce the number of units you offer, because some of them are maybe just not as popular, right? This could be a way for you to actually refine your offering by simplifying it and really focus in on only the units that are actually providing you the type of profitability that you need, right? Hopefully that helped. And I see that Faith is here, so I'm going to stop sharing. And I know we're right at time, so thank you guys for hanging with us.
No, we perfectly timed. So thank you all for your questions in the Q&A. I do see we have one last question, so we have just a minute. We can touch on that from Spencer. I really enjoy your philosophy and everything you're saying. Thus, I'm curious, what's your favorite book or a book you would suggest to a small business owner / entrepreneur? I love this question.
Yeah, so this is a great question. And Spencer, I would tell you that I have a lot of favorite books. I think right now, and maybe in relation to what we talked about today, a book that might be interesting is something called The One Thing. And it's about really simplifying your thinking so that you can focus on the one thing that's most likely to move you forward to success. I have plenty of others, though. Reach out to me on LinkedIn if you want, and I'm happy to share a bunch of other ones, but that's the one that might be the most germane to what we talked about today. And thank you all very much.
Excellent. Thank you so much, Stephanie. Thank you, Spencer, for the question. I always love asking that question. And as Stephanie shared, you can always connect with her on LinkedIn. Her contact information will be attached to the slides and presentation that she used for today. So I see some people asking for that contact information. Revisit our website later today and you'll be able to connect with Stephanie with her contact information there, or just do a simple search of Stephanie Sims. And I have no doubt Financeability and Stephanie will come up. But Stephanie, thank you so much for your time. I always enjoy how you break it down for us to make it a little bit more digestible and understandable for our listeners and for all of you joining. I appreciate your time this morning and hope that you come back next week at 9 o'clock as we talk about navigating a hot job market. So we look forward to seeing you then. And I hope you all have a great rest of your day. Thank you again, Stephanie.
You bet. Thanks so much. And I hope everybody has a great day. Take care.
Bye.
Bye.